Hello guys, so we're starting off with your exam preparation today. So we're going to look at what you need to know and how do you answer questions. So let's start off. So very firstly, you'll get a nice sheet with instructions on it, and these instructions you need to read carefully, and then remember all the instructions needs to be followed. So instructions and tips. Number one, answer all the questions. So again, in accounting, you don't have any options. You need to answer every single question. So in your mid-year exam grade 10s, you'll have a 200 mark paper for 2 hours, and you need to answer all 5 questions. I think they will ask you 5 questions, and therefore all 5 questions need to be answered. Now, a very important one, number 2. A special answer book will be provided in which you need to answer all the questions in. Now remember, this answer book will be supplied with your question paper, and you'll see there's nice blocks and there's journals and all the ledgers will be there. So you don't need to draw anything, they will give it to you. Now, say I give you a clear open block and I tell you to calculate something. Remember, you can draw a tier count in there, you can draw a formula, you can draw 2 columns if it helps you with your calculation. So always remember, you need to adjust that answer book a bit if you need to. If it suits you on answering a bit differently, do it in a block, do it in a T. Another one, number 3, workings must be shown in order to achieve part marks. So again, I need to see all your workings. Remember, I can't take in your calculator as well to see how you calculated some amounts. You need to show all the calculations and show it clearly. Do a heading and say, I'm calculating this, and then do the calculation so that all the teachers that's going to mark your papers know exactly where you got your final answer. Another one, you need a non-programmable calculator. As you can see, that's number 4. Now again, please pitch up with a calculator. Don't get stressed now when you enter the exam and you see you forgot your calculator at home. Please remember your calculator. It makes your life so much easier just to walk in with all your stationery and your calculator and start the exam. Another one, you may use a dark pencil, but then remember, you need to use that pencil throughout. You can't do a bit of black ink and a bit of blue ink and a bit of pencil. And please, when you use a pencil, use it very dark pencil. Don't write too light and then teachers might not be able to read your answers. Please use a dark HB pencil. Another one, you need to round off normally to 2 decimals. If you go look at number 6, then remember, you need to always round off to the nearest rand if they state so. So yeah, I stated round off all cents to the nearest rand. So if you read that, you need to know, I can't have cents, I need to round off to the nearest rand wherever I do a calculation, unless it's otherwise stipulated. So always read that carefully. Then another one, that's a given one, you need to write neat and legibly. You need to be able to write in such a manner so that your teacher can read very nicely. Another one, and this is probably my important one for today, work fast. 2 hours flies when you have 200 marks to complete. So remember, if you're going to take it easy, you don't have a 5-minute nap break in between, you need to write. You need to push yourself. I know my learners sometimes struggle in class to finish a test and a project. So please, the faster you work, the better. And you need to practice this at home. Practice. And again, the better you know all your formulas and your formats and all those things, the faster you'll be able to work. And then lastly, do not use any typics. When you use typics, you need to wait for it to dry, and then sometimes you forget to come back and go back to that answer, and then you lose a lot of marks. So please don't use typics, because you will lose marks when you use typics, because you're going to forget to go back and then complete some sections in a question. So that is more or less your instructions. You need to read it carefully, and please know what to do when you start your exams. Now your exams instructions might differ, but read it carefully and do as stipulated. Now, what is the work that you need to know? So remember, we started already in the beginning of January with new work, where we looked at the Gr10 principles. We looked at the informal and the formal businesses. So what are the differences between those two? You need to know it. So let's go down on the slide. You also need to know what is the difference between ethical and unethical practices within a business. You know what's good, you know what's right. Remember, that is ethical. When you are doing something underhanded, when you are bribing, when you're committing fraud, when you're hiding money, when you are trying to hide a bit of money from SARS, all those things, that is unethical, and that can be charged, and you can go to jail, you can pay penalties or fines. So know that the differences between ethical and unethical practices within a business. Another one, know all the source documents. Now remember, guys, we started off with source documents in grade 8 already. Now remember, there's a few new ones. Know all the source documents. Now to complete a source document, if I give you a source document, know where to place those source documents. What journal will I use this document? Another one, all the journals. Now remember, we started off with the CRJ and the CPJ. We went on during the year with the journals, and then we stopped with the general journal and the salaries journal and the wage journal. That's all your new journals. So know all 10 journals. I'm going to go through them in a bit. All the ledger accounts. Remember, your T accounts, your general ledger is regarded as your T accounts. Know all of them. But again, know your subsidiary ledgers as well. What's a subsidiary ledger? It's your debtors ledger and your creditors ledger. Another one, know how to do all the trial balances. Now, know what 2 sections we have in all trial balances. Remember that the closing trial balance only have the balance sheet section left. Know these small things. It will assist you in your exam. Another one, we started off with VAT. This year, we're going to look at VAT for the next 2 years as well, but know all the principles of VAT. What is the standard rate of VAT? Know all the things connected to VAT, because they will ask you questions about it. It can be true and false questions. They can give you fit column A to B. They can give you actually any question. Another one, the last week that we finished off with. Know the adjustments. Know the closing transfers. The better you know these, if they ask you questions about it, you can fly through that question, quickly complete it, and get maximum marks for that. So that's more or less the work we need to cover and study for our mid-year exam. So let's jump straight in to our key concepts. Now I'm quickly going to go over this before I give you a question. So let's look at the very first one. And this is, again, I've tabled it for you a little bit. There's the source documents. I gave you the journal column and then also the T account column. So if you go and study this, you will hopefully do very well. So let's look at the very first source documents. Remember, we have the duplicate receipt and we have the cash register tape. Where will we take these source documents? We'll place it into the CRJ. And remember, normally we have the big 5 in the CRJ. We have the doc, we have the day, who paid me, so the person who gave the money to the business, and then the amount will go to the bank column, and then the reason. Why did we get this money? Did we sell? Did we have rent income? Did the owner give capital? So know all of those as well. But now remember, what is that column analysis of receipt again? Remember, an analysis of receipt means I'm counting all the cash I received or all the checks I received for that specific day. You're not running to the bank every minute after you received the 100 Rand. You're not running to the bank. You will create a total at the end of the day. You'll add up all the money and then you'll take it to bank at the end of the day. So that's why you have analysis of receipts. Now let's look at the general ledger quickly. So what do I debit? I will debit bank. So bank will go up on the debit side, and therefore capital will go up, your sales will go up, your debtors control will go down because they paid, fee income will go up because it's an income, and interest income will go up as well. So hopefully you remember all these incomes. Now remember, we have the big 5, except if we have sales, sales has got a partner, and that is cost of sales. So remember that, and then remember that cost of sales will influence your trading stock. So know that as well. So let's go to another one. Your next journal we looked at was your CPJ, the source document, again, your check counterfoil. And what do we do here? We normally pay our expenses, we buy assets, or the owner takes money as drawings. And now remember, your bank is an asset. What happens to this asset? The asset will go down on the credit side. So therefore know that bank will always be credited when we pay or buy, and therefore bank will decrease. So know these 2 journals. I'm sure they'll ask you questions about it. Now, the last cash journal, let's use another color, will be petty cash. And this PCJ, remember, we need to restore it after you've used it. So normally we'll start with a certain amount. Say I tell you the balance is 1,000 Rand in the beginning of this month. What happens now? I use some of the money. So I used 500. How do I restore it back to 1,000? Whatever I've spent, I need to get back. So what it means is when I start with 1,000, for the next month, I also need to start with 1,000. So therefore, whatever I've spent, I need to get back. And now remember, the thing that you need to remember here is your petty cash will go down on the credit side because it decreases because you've used the money. Now let's quickly look at your other two that we already touched on last year. We have your duplicate invoice at your DJ, your debtors journal. Now, there's only 4 accounts connected to the DJ. Your debtors will go up and your cost of sales will go up, both on the debit side. But remember, cost of sales is bad for the owner, and then your sales will go up, which is good for the owner, and your asset, your trading stock, will go down then on the credit side. So that is your DJ. Hope you can remember it. Let's go look at your DAJ now, your debtors allowance journal. And when do I use this journal? This is when the debtor returns goods to us. So they return goods, they didn't buy from us anymore. We want to create a separate account called debtors allowances because we want to keep track on how much stock do I receive back from my debtors, and therefore I will create the debtors allowances. So the debtors allowances in your DAJ will go up on the debit. It is very bad for the owner's equity because we did not now sell. And then your trading stock will go up if it's still sellable. And the debtor owes you less because they returned, and your cost of sales will go down. And because cost of sales go down, the owner is smiling because he's got a smaller expense, and therefore he doesn't need to give out that money now. Okay guys, let's look at your creditors journal. Remember, CJ is used when we buy trading stock or we buy equipment or anything that we buy and we owe the creditor now. And then the CAJ will be used when we return to the creditor. So if we look at the CJ, there it is. The original invoice will be our source document. And remember, we're buying things, so assets will go up, your expenses will go up, and your creditors control will go up on the credit side because we are actually buying on credit and owing more and more and more. So the thing is, when we return and we're not happy with, say, an asset or trading stock that we bought, we will issue a debit note, and this debit note will go to the CAJ. Your creditors control will go down. Expenses and assets will also go down because we now return these items. We don't own it anymore, or we don't owe the creditor anymore. So now we just finished off with the general journal, the salaries journal, and the wage journal. We are going to look at these 3 journals in more detail because they are a bit new to you, but the other 7 you need to know now. You need to be easy, completed, fine with it. I'm sure you are. Let's go look at the next slide. Now guys, this slide, again, you need to be able to identify all the T accounts that we need to use. And hopefully you still know where they go up, where they go down. Now I'm going to ask you, complete the table below with items under assets, liabilities, incomes, and expenses. And I'm going to show you, here's the table. And I'm going to give you quickly 2 minutes to complete this. Okay guys, let's look at your answers. So firstly, you have assets. Remember, your assets will be plus minus, and that will equal your owner's equity, which is always minus plus, and your liability is always minus plus. Now remember, your non-current assets, your fixed assets, will be your land and buildings. Guys, I'm going to abbreviate a bit to save us a bit of time. We also have vehicles, and then we have equipment. And then remember your financial assets. What financial assets do we have? We normally have a fixed deposit. And then what do we have as our current assets? We'll have your trading stock. And remember, we can use goods or inventory as an example here. We have your debtors or your debtors control. Then we have bank. We have petty cash. Just make that K a bit better. We have your petty cash and the new ones. Hopefully you can remember the new ones. We have cash float. We have accrued income. We have prepaid expenses. So you can see the list can go on and on and on. But remember, your assets go up on the debit and then your assets will go down on the credit. Now guys, I'm going for add now. So if you didn't finish this full table, you have a bit of extra time now to quickly complete this. Okay guys, let's look at your liabilities now. Remember again, liabilities go down on the debit and they go up on the credit. Now, what non-current liabilities do we have? We normally have loans. And remember, this can just be referred to as a loan, that can refer to as a mortgage loan to whatever bank. So know that any mortgage loan or long-term loan or just a normal loan will be shown as a liability and it's normally non-current. Now, what current liabilities will we have? Now, remember, there's a very long list and some of them are very new to you. So let's start studying all these current liabilities. Now, I'm going to abbreviate a bit. We have your creditors control. Then we also have your bank overdraft. Now remember, bank overdraft, what is a bank overdraft? Not all businesses have it again, but that is when we go into the negative. So we take too much money from the bank than we actually have in our account. So you need to go and apply for this at the bank. They won't give all people authorization to have a bank overdraft. So if you have a good credit limit, you'll most certainly qualify, and then you can go into an overdraft. So therefore you owe the bank money. Now remember the new ones. We have creditors for salaries or for wages. Now another one is your pension fund. Let's quickly fix the spelling here. Pension fund. We have the medical aid fund. We have SARS pay as you earn. We also have SARS UIF. Another ones, we have the accrued expenses. I'm going to abbreviate a bit. Another one will be your income received in advance. So you see that's all the new ones. And then a very important one to remember is your short-term loan. And that's all your current liabilities. So know the list. And again, if I give you adjustments to them, you need to show all the adjustments in workings and don't just give me a final amount. Show me how did you get to that final amount. Now again, your owner's equity in the middle. Now remember, what is good, what is bad? There's quite a few good ones. The good ones will be shown on the credit side, which is your capital and then your income. Now what incomes do I have again? I'm just going to write quickly. We have sales, we have your interest income, we have your current income, we can have rent income, we have your fee income. You see there's quite a few. And now the bad ones. Let's quickly place the bad ones on the debit side. These, although they go up on the debit, decreases my owner's equity. So that will be your drawings. And let's go and see if you can list a few expenses. I'm just going to do it quickly. You have your packing material, you have stationery, you have your rent expense. You can have advertising. You can have water and electricity. You'll have interest on loans. What else? You have debtors, allowances. You have your cost of sales. You have insurance. You see, guys, the list can go on and on and on. So know all of them, but let's quickly stop at the two new ones. It will be your trading stock deficits and then your depreciation. Hopefully you can remember that. Now, again, if you don't know this, you are going to really struggle with the T accounts. Again, know what's a debit, know what's a credit. Ask yourself logically, is the bank going up? Is the bank going down? Is the debtors going up? The debtors going down? And those two are very frequently asked. The creditors control as well. Very important T account. Know it. The trading stock account. So those four are the loved ones, especially from my side. I like to ask those four. So know all four of them very well. Now, with this, expect a question like the accounting equation, where I'm going to give you transactions, and now you need to analyze these transactions in any specific order. So I will give you an example to say, this is what you need to do. So I can include the source document, I can include the journal, I can give you a separate amount for the amount where you just show me plus and minuses in your assets and owners' equity and liability columns and all of these. So let's quickly look at the first one. I'm going to give you a nice example here. So I'm telling you, J. Krause opened a current bank account and deposited the 150,000 Rand as a capital contribution. Now, firstly, ask yourself, what happened here? Yes, the owner, who is J. Krause, he started this business with 150,000. So always look from the business's point of view. Did the business get money? Yes, the business received money. So where will we put this amount? We'll normally put it in the CRJ, and that means the business's bank account went up on the debit. And why did it go up? Yes, the owner gave capital. So what I like to do, I like to draw two accounts like this, and I will say bank, which is an asset plus minus, and this is my rough work. My bank is going up, and my capital, which is the owner's equity account, is definitely going up as well. Capital is going up, and there's my debit for the credit. And as you can see, your general ledger account, your bank will be debited. There I showed you. Your account credited is capital, and then the journal, CRJ, the source document will be a duplicate receipt. And then always check. I always like to draw a nice thick line here to show that I have an equation and it needs to equal on both sides. So if I go and look on the left-hand side, it's plus 150, and if I look on the right-hand side, it's also plus 150, and this is now in balance. 150 on the debit, 150 on the credit, 1,000, and therefore I'm in balance. So let's look at a few that you can start off with. The very first one, let's read it together, and then I want to give you a minute to quickly answer it. The bookkeeper that J. Krause hired was not too experienced. So as a result, she incorrectly posted the salaries in the CPJ to the wages account. This error needs to be corrected, and therefore salaries for the month amounted to 15,000 Rand. So now we need to go and fix this error. I hope you can remember what journal to use, what source document, and what account will be debited and credited. So 1 minute starts now. Okay guys, let's look at your answers. Firstly, I want to explain it. So what happened here? This bookkeeper went to wages and she increased wages. So this is where the mistake lies. It's not wages. So what should happen to your wages? We should decrease wages and take it where? we should go to an account called salaries. And this was actual fact a salary. So salaries needs to go up. But now remember, both are expenses. So we need to go to the owner's equity column and say minus plus. Now remember, here owner's equity is going up because it decreases, but here owner's equity is going down because the salary is more and expenses that increases is negative for my owner. So let's look at your answers. Hopefully you knew to place this in your general journal. And remember, the journal voucher will be used. And remember, salaries, like I showed, debit, wages will be credit. And yeah, let's check. Are we balancing? 0 equals plus 15 minus 15. And this is in fact also 0 plus 0. So therefore, we are balancing. I hope you got it right. So let's look at the next one. I'm going to read it with you. Credit card sales of 12,000 Rand took place during the month. Markup is 50%. Your 1 minute starts now. Okay guys, credit card sales. Remember, credit card sales exactly the same as a cash sale. Remember, it seems like we are selling on credit, but it's not. That credit card belongs to the bank. The bank issued that credit card to the client, and that client now uses this credit card to buy from me. Now, the bank will give me my money directly. Remember, the transaction and the debt is now actually between the client and the bank, not between me and the client. The client pays me now with a credit card, I get the money now. So use it as a cash sale. So the first thing you need to know is a credit card sale goes to the CRJ and will issue a receipt or till slip. That's your source documents. Now let's go and quickly look at how to again calculate your cost of sales. Now I gave you the sales amount. So if you have sales here of 12,000, remember, you need to put it on 1 times by 100 over 100 plus markup, which is in this fact 150. So therefore, no, 100 divided by 150 gives you smaller than 1. Any amount smaller than 1 means that I will get my cost of sales as an amount smaller than my sales. So if you go and check and see, and you calculate it wrongly, say you swapped it around, 150 divided by 100, you will see you have more than 1. So that means that your cost of sales, in fact, now is higher than your sales. And in this case, you're buying something for 200 Rand, but only selling it for 100, so you're making a big loss there. So go and check your calculation, that your cost of sales is always smaller than the sales amount. Now, if you go and calculate it on the calculator, you would have received 8,000 Rand on there. So now, what do? Remember, 4 accounts used. Your sales goes up with 12,000. Why? Because we've received money. Where did we place the money? Your assets went up with 12,000 as well. But now remember, cost of sales. Whenever we have a sale, we have cost of sales. So I'm placing it there. How much is your cost of sales going up with? 8,000. And then what happens to your trading stock? Your trading stock, which is an asset, is going down on the credit side with 8,000. Why? Because we are selling the stock. The client is taking it, they're leaving with the stock. So let's go and look in your columns. How did I place it? So here you can see bank went up and sales went up with the 12,000. What journal did I use? I used the CRJ, and then the cash register roll or the cash register tape was used. But now remember, when we have a sale, we always have a cost of sale, and therefore cost of sales went up, which is an expense, and this expense decreased my owner's equity. Do you see? And then your trading stock, which is an asset, so we go to the asset column here, also went down because we've sold. Now let's go and see, are my amounts in balance? And as you can see, plus 12 equals plus 12, minus 8,000 equals minus 8,000. And there it is. Let's go look at the next one. Number 3, J. Krause decided to donate stock in his own capacity now to the value of 300 Rand at cost price. And remember, when we donate or when the owner takes, it's always at cost price to a needy school. So quickly do this in those columns. I'm giving you a minute. Okay guys, let's analyze this one quickly together. So J. Krause decided to donate stock. So what are we doing? We are donating trading stock. And remember, when we give trading stock away, it will go down. It's an asset, so it will go down on the credit side. But now he's donating it in his own capacity. So remember, when an owner takes anything, it's regarded as a drawing. And drawings will go up on the debit side. But remember, this drawing, although it goes up, it's bad for my owner's equity. Now, very important, what journal will I use again? Let's go and see. You should use the general journal. So therefore, a journal voucher will be issued. Your drawings will go up. Your trading stock will also go up. But remember, your trading stock will go down. Just let me fix that one. Trading stock will go down. Why will it go down? Your assets decrease on the credit side, and drawings, although it went up, as I said, it affects my owner's equity negative because it's on the debit side, and therefore you can see minus 300 equals minus 300. Now guys, we've completed 3. There's still a few to do. I'll see you after the ad. Okay guys, let's look at another one. Number 4, JC's Entertainment CC paid one of the creditors' big bands 13,000 Rand in full settlement of their account of 14,500. I'm giving you 1 minute to quickly go and check what happened here, what accounts were affected, what journal will I use. 1 minute starts now. Okay guys, I know you've got to try it, so let's see. You've paid, so very easy, go to bank, and how much did we pay them? We've paid 13,000 thousand. So bank, which is an asset, goes down. Now what happens to your creditors control? Remember, it's a liability. We'll go down on the debit side, and there is my debit for the credit, 13. But now remember, we owed them 14,500. So what about the extra 1,500? Your creditor needs to go down with this 1,500, but now what will my other account be? My other account will be your discount received on the credit side. Why on the credit side? Because it's referred as an income, and there you will see I have a debit for the credit. So let's go look at the table. Here it is. So your creditors control, both instances go down. Why? Firstly, because we received money. We placed that money in the bank. So therefore CPJ, check counterfoil was used, but now the discount received. Again, discount received, I'm getting an income. And now let's go and look at my equation. Am I balancing it? Yes. Minus 13 on the one side and minus 13 on the liability column. And then your owner's equity, let's go and see. Your owner's equity now is plus 1,500. And your liabilities will be minus 1,500, and therefore, will you get 0? Yes. So your assets not affected there, and you will see on the credit side a plus and a minus. On the other side, I mean, plus 1,500, minus 1,500, that will give you the 0. Hopefully you got that one right. Let's go to the second last one. So number 5, JC's Entertainment CC bought stock on credit from import traders. The amount we bought was 12,800. Now they also state here they also charged a delivery fee of 1,350 to the business. Now remember, hopefully you remember where to put this delivery charges. I hope you know. I'll see you in a minute after you complete it. Okay guys, let's look at your answer. So firstly, we bought trading stock, and your trading stock and asset going up. And then how did we buy it? On credit. So creditors control, your liability also going up. But now remember, when we buy any trading stock, there will be, sometimes they'll charge you a delivery fee on it. But now, did you pay 1,000 Rand for the stock if the delivery charge was 100 Rand? The answer is no. So the delivery charge increases the value of your trading stock because it's actually costing you more to buy this trading stock. So where will I put all my delivery charges? I will place it in my trading stock column, and therefore also my trading stock count will go up and your liability will also go up. Very easy. Let's go look at your columns here and your answers to them. There it is. So as you can see, trading stock went up, Your creditors also went up. In the creditors journal, we've used the original invoice again. And now, you see, we've added the two amounts here. So therefore, we owe it together. Let's go look at the last one for today. And that will be number 6 there. Jay-Z's Entertainment CC sent a check with 85,000 Rand to First Bank in paying off their loan of 75,000 Rand and interest. So, hope you get it right. 1 minute to complete it. Let's look at your answers, guys. So again, we are paying now by check. So again, check counterfoil paying. Again, telling me that it's the CPJ. What am I paying? Now let's go and see. Firstly, we need to pay a total, bank going down with 85,000. But what are we paying? Firstly, we are paying a loan, which is a liability. The liability going down because we are paying it, but they're telling us we only paid 75,000 Rand on the loan. So there it is. But now, what is my other account called? It should be interest on the loan and expense plus minus. And what happens to my expense? It goes up. Now, what is the difference here, guys? This expense would have been 10,000 Rand. And as you can see, my two debits are equaling my credit. Now, let's go look at your answers quickly. Here it is. As you can see, we're firstly paying off the loan of First Bank. We're using the same check, but then also we are paying bank going down here, interest on loan. And there you'll see minus 75 equals minus 75. Remember, the loan is a liability, and then your interest on loan will be regarded as an expense, and also minus equals my minus. Now, guys, be prepared for at least 30 marks, 40 marks, maybe sometimes 50 marks when we're looking at the accounting equation. Know it very well, and this is the first step. If you can do this, you can actually do anything. But again, know your type of accounts. Ask yourself, what's happening? Ask yourself, am I paying? Am I buying? How am I buying? How am I selling, perhaps? Ask yourself these questions softly in your head when you complete this. Now let's go look at 2 nice questions for you to quickly complete in a minute. What does the acronym GARP stand for? And then list all 6 GARP principles for me. So I'm going to give you 1 minute to complete both of these questions. Guys, let's go look at your answers. Just move this one on. There it is. They're generally accepted accounting principles. I hope you got that one right. And then your 6 GARP principles. Let's go and open this for you. There it is. The historical cost, firstly, again, whatever I buy, say equipment and land and buildings and vehicles and your trading stock, that will be always recorded at your historical cost price. So, for example, I paid 2,000 Rand for a cell phone. In 20 years, if I still have that cell phone, it will be recorded as 2,000 Rand because that was the amount I paid for it. Land and buildings, the same thing. Yes, maybe it's worth more, but what did you pay for it? That's the historical cost. So we are fine with the historical cost, I hope. Matching principle. What is again the matching principle? We were busy with the matching principle quite a lot at the end of this term. We need to match all income and all expenses to a particular financial year. Financial year, again, 12 months. So I don't care about when am I paying it, when did I pay it, do I still owe? I don't really care about those things. I want to know how much, if I live in a perfect world, should I have paid on, say, water, electricity for this year? If I didn't pay an invoice yet, I still owe it for this year, but it's still recorded as an expense for this year. So matching, easy. Match all income and all expenses to a particular year. There's that one done. Now materiality, I like to use the one for school stationery account. Now remember, school can now split their printing and paper into a separate account because it's material to see how much did the school spend on stationery and paper. So therefore, if they mix everything together, they can't really say if the staff is now sparing and using paper wisely and not printing too much. And then businesses that don't really care can just add everything together. So they don't care if we have 10 pens and a lot of ink, whatever. Everything is just added together. So hopefully you understand materiality. Certain things will be separate. So sundry expenses, for example, will be all your small expenses just added into sundry expenses because I'm not going to list 3,000 T accounts for all the minor expenses we have in the business. So that's again your materiality. Your going concern just means that as we go on and we set up statements at the end of this year, are we continuing next year? Will we go on in the future? And that means when we set up these statements, we need to show that this business will go on. The business entity, that's what my learners like. Whatever is the owner's needs to be recorded as the owner. So if the owner takes anything, it will be recorded as drawings. And then the last one, the prudence principle. So this means I'm going to be conservative or pessimistic in all ways. So remember that if I lost stock, I need to record it as stock lost. I need to take it out and record it then as trading stock deficit on the debit side because I have lost the stock. Now guys, these are the 6 Gr10 principles. I'll quickly repeat them. The historical cost, the matching principle, the principle of materiality, the going concern, the business entity, and lastly, the prudence principles. Now, guys, I hope you are studying hard, that you're practicing, and then I'll see you in a bit for our last revision lesson before exams. So good luck and keep on practicing. Bye-bye.